following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Thank you for joining us today on 94.1 FM, WNBU, and Cable TV 10 in New Bern. We welcome all our viewers and listeners. Some of you also may be streaming us from our website, www.dlblain.com. We welcome you as well. If you have any comments or questions on the show, we love to hear from you. Our phone number is 252-633-0107. The email here at the show is allthingsmoney@dlblain.com. And of course, the easiest way to contact us is just head over to our website, www.dlblain.com. And of course, the phone numbers are there and a big Contact Us button. If you have some comments or questions about the show, we'd love to hear from you. A little bit of administrative announcement here. Our radio station, 94.1 FM, has signed the Mike Huckabee Show for the noon hour from noon to 3, Monday through Friday. So unfortunately, that's going to bump us out of our Friday 12:30 to 1 slot. So we'll no longer be on Fridays from 12:30 to 1. We will still have our show Tuesday evening from 6:30 to 7, as well as we'll also be on Thursday from 6:30 to 7. And of course, our Saturday morning time, 8:30 to 9, will stay the same. So we like that Friday afternoon show, but unfortunately, Mike Huckabee was preempted us and bumped us out of that slot. So hopefully Tuesday night, Thursday night, or Saturday morning will work for you, and we look forward to hearing from you. Okay, well, let's get started with the show here today. First one I just want to touch on, there's a lot of debate out there with the fiscal cliff and taxing the wealthy and a lot of different competing proposals. And of course, we don't, one of the arguments against raising the tax rates is that the people will just leave or find a way around it. We've seen this happen in California and in Britain. This article comes out of the Telegraph out of the UK, talks about 2/3 of millionaires left Britain to avoid the 50% tax rate. And it goes on to say in the 2009-10 tax year, more than 16,000 people declared annual income of more than £1 million. Now, a pound is not the same as a dollar. The conversion rate, it's actually more. It would be, I think, maybe 1.7, 1.8 million dollars. But anyway, more than £1 million. This number fell to just 6,000 people. So it went from 16,000 down to 6,000 after Gordon Brown introduced the new 50% tax rate of income shortly before the last election. It's believed that a lot of these Britons either moved abroad or took steps to avoid paying this new levy by reducing their taxable income. It's still far below the level even recorded at the height of the recession and the financial crisis. And so we see that people, and it's just like everybody out there, if you're getting punched in the head or your head's getting beat against the wall, you're not just going to sit there and keep taking it. Well, wealthy folks are the same way. They're not just going to let you use them as a punching bag. Sure, Warren Buffett goes on TV and says, well, tax me more. And, that's great. Maybe for some of these ultra wealthy folks, that's something that they can go out and say. But the majority of people, they're just not going to take it. And if they're going to continue to reduce their taxable income or simply move, the best answer to tax reform is not single out a small group of people and try to soak them for everything. At the same token, I don't think they should, increase taxes on the less fortunate by a tremendous amount. But the solution to the problem is broadening the tax base and reducing the spending. It's not trying to soak a few people. Anyway, that's from the UK there, what happened. And several weeks ago on the show, we talked about France, exact same thing. socialist president comes in, jacks up the tax rate on the wealthiest French, and of course they all leave. And so we would expect something like that if they try to do that in the U.S. as well. So today's show, I want to focus on something. In my day-to-day, we see people come in our office. I do a lot of read personal finance books that are available to the general public. I'll read a lot of academic journals. I do a lot of studying on investing. I see a lot of people, a lot of portfolios, a lot of different things. And, sometimes we try to make things or things seem too complicated. And today I just wanted to touch on a few things, a commonality that I see amongst investors. And one of the things that I see that makes a successful investor, and something that we do with our clients, is a lot of people are out there and they're always trying to make money from investing. They're, instead of using their capital and labor to go out and earn a salary and save and invest to grow their savings, they're trying to use the stock market as a way to make money. And if you're a private equity firm or private real estate and you have big buckets of money and you're going out and you're buying whole companies, or you're investing in whole companies or developments, you're developing property or something, sure, that's taking your money and making money from it. But the vast majority of people, you're saving in your 401k, you have a taxable account, $1 million or $2 you're saving, it's your retirement nest egg, those type of things, saving for college. Those things, you have to be very careful about trying to use your money to make money. And so we see that one of the things that I call is it's really growing your savings. And you're out there that the markets, whether they be stock markets, bond markets, real estate, commodities, those type of things, they offer a certain rate of return. And we want to at least be capturing the return that the markets provide for us. And so one of the things that I see is, instead of focusing on how to make money, how do I make money, is that successful investors, including at our firm, is we spend a lot of time focusing on how not to lose money. And I need to put a big caveat on there, is that we're not talking about someone that is scared of their shadow and wants to put all their money in the mattress or CDs or something like that. We're talking about somebody that is comfortable with some sort of risk and is comfortable with taking their money and investing it into things that have the potential to return more than a savings account or your mattress. So when we talk about focusing on not losing money, I'm not talking about just burying it in the backyard. I'm talking about not getting overly excited or overly aggressive about making money, but with every investment looking at how not to lose money with it. When we come back in the next segment, we'll continue on this topic and explain a little bit more of what I'm talking about and how you can put it to use in your own portfolio. So for All Things Money, I'm your host, David Blain, and we'll be right back.